Hello, everybody. Green Effect Podcast Season 6, Episode 3, live on the air. Let's get right into it. I got some really good stuff I want to get into. We're going to talk about renewing your mortgage, okay, talking about rates and terms and stuff like that, and just some human kind of approach to that, we'll say. And then I also want to talk about insurance, creditor insurance, life insurance, because this is becoming a massive issue right now. So we're going to talk about that as well. And then I think what I'm going to do, I'm going to end the podcast with just some basic stats as to what the heck's going on out there. Okay. Because as a lot of you know, bit of a mortgage nerd. I kind of like to, dabble in numbers, in things that I do not have a degree on, just simply looking at numbers. So that's what we're going to do today. All right. My first thing I want to talk about, and as you know, we have a humongous renewal wave in the making. And 2026 is going to be a bit of a double cohort. Let me explain what this means. So, in 2026, we're going to have probably a double cohort of renewals because these are all the folks that have those 1 point nothing% fixed rates coming up that they got in 2021. And it's the folks who only took a 2 or a 3 year fixed in 2023 with the expectation that rates would be coming down, which check, got that because rates are definitely lower now. So the cohort has actually become a lot bigger than I think we expected. Okay. And again, it wasn't something we were really thinking was going to happen, but hey, here we are. And now we got to deal with it. All right. So, okay. So my first thought on this, and I want to be really clear because I think there's a lot of crap out there with mortgage brokers, real estate agents. It's a lot of like salesy whatever. Okay. Here's my comment on if you have a mortgage coming up for renewal. I had clients this week and they got their mortgage 5 years ago. They got it through a monoline lender. Okay. So the rate was good. And now it's up for renewal. Now, when a mortgage is up for renewal, I always ask this obvious question. What were the renewal rates your lender was offering you? Because at the end of the day, I can do all the work, do an appraisal, load up an application, pull your credit bureaus. But at the end of the day, if there's a rate from your existing lender that's a good rate and it makes sense, then we got to talk about that. And I think you got to remember, they're your existing lender. Yeah, damn right the rate should be good. You've been with them for all these years, right? People kind of get all weird about it, but it's like, yeah, it should be a good rate. Now, the couple I met with, I asked them, what are they offering you? Let's just see, just cards on the table. I'm not going to be all kind of dirty about it. Just tell me what they're offering you, right? They gave me the rates that they were offering. I'm like, you know what? Those are really good rates. I don't have something better. I just don't. Having said that, let me give you some of my time and let's just do a quick analysis. Is there another need? Because as a mortgage agent, I'm not an order taker. I'm not just going to like, oh, great rate. See you later. Goodbye. Right. Let's just talk about things. Is there an issue with cash flow? Are we short on savings? Is the mortgage renewal on a $200,000 mortgage, a good rate of, I don't know, 3.75%? I'm just making numbers up here. But you got 100 grand in unsecured debt at 20% interest. Guess what? That math won't math, right? Is there a way to save you money on that 100,000? And sometimes, hey, if your income is really strong and you don't care, fair enough. That's good. Then go ahead and renew, right? So it's more about having a conversation and saying, hey, are there other needs, right? We've got some advanced strategies and stuff like that. But at the end of the day, if it doesn't make sense, then it doesn't make sense. Now, most rates are pretty much the same out there. There's a lot of variance. Okay. I shouldn't have said it that way. I'm going to have people creeping in my comments. That's way overgeneralized. But if I'm comparing like a variable that I have compared to a variable another broker has or a bank, we're all kind of, there's going to be some variance for sure. Going to be a little bit off, right? Different volumes, different, different ability to get discounts. I'm not going down that road, but a lot of the rates are very, very similar. I would rather, as a mortgage agent, say, look, thanks for your time. I appreciate me having a look at everything for you. You're in great shape, fantastic shape. Let's do this. Renew with your lender. I'm going to give you free advice. Take a 3, a 5, a variable, whatever. Take the advice. My compliments on free. Here you go. But do me a favor. Hey, let me know the details of the mortgage. We have some software that tracks your property value and some other stuff. Let me take that data. I'll give that to you again for free for the next X number of years. Track your mortgage, track your value. If anything changes, then you let me know and then we can help you out, right? There's nothing wrong with that. So, if you're working with a mortgage agent and you got a mortgage up for renewal, have the rates that the bank offered you in front of you. Moving on. Okay, I have this situation right now, and this is where I've changed a lot on how I view this particular topic because I think this is very important. I think we need to talk about this because this can become a big mess. So, I have clients right now. I can save them a lot of money. Rate is better. Pay down their mortgage faster. Like just everything. It cut and dry. Mortgage up for renewal. They're moving later on this year. I can just save them a lot of money. It just makes complete sense. It's so straightforward and easy. Clients are a little bit older. They have creditor insurance. Let me explain what this is. Basically, if you get a mortgage with your bank, banks offer this. You have the option to apply for insurance that if you die, the mortgage is paid for. There's terms and conditions, but we'll just keep this simple for now. In the same breath, if you become disabled, you can't work, they make your mortgage payments up to 2 years, 90-day waiting period, etc. Some even offer job loss insurance. Listen, you got to have insurance. I don't care what insurance you have. You got to have insurance. Household debt the way it is right now, we're all living paycheck to paycheck. If someone dies, just sell the home. Do you really want to go through that and lose all your equity? Not cool. Okay. But here's the problem with bank creditor insurance. It's a great idea until you have to renew your mortgage. Or let me rephrase that. Renewing is fine. If you are committed to that same bank for the rest of your freaking life, knock yourself out, get creditor insurance. Because if you need to refinance, this is the situation I'm dealing with right now. If you need to refinance, the mortgage agent's like, yeah, I can save you tens of thousands of dollars. I can do that. This is the plan. It all makes sense. Whatever. But your health has changed. And you leave that bank, your insurance policy is canceled. Canceled. What some banks are doing, because I ask, because I know the game. I get your mortgage statement. If I'm going to refinance your mortgage, I get your mortgage statement, your property tax bill. I can see part of your payment is life or disability insurance. The problem is, if all of a sudden you want to switch and your health has changed, the policy cancels and you got to get insurance somewhere else. Well, if your health has changed, you might not get that insurance. Or there might be conditions or whatever. So because this is one of the sole reasons now, because folks, hey, cards on the table. I sold creditor insurance for years in my previous life, partially because we had to. Like, the bank's not stupid. Let's call a spade a spade. When a bank sells creditor insurance, yes, they're trying to protect you. Absolutely. However, they make a lot of money off of it. And they know, they know at renewal, the only thing that gets more expensive as you get older is bloody insurance because your health deteriorates. It is what it is. Banks aren't stupid. I always tell my clients this. The banks are like the casino. They always win, folks. Always. So be careful with this whole creditor insurance thing. And I have clients right now, I sold them creditor insurance. Absolutely, I did. Right? Going forward, there's two options here. Let me give you the alternatives to your bank's creditor insurance. Obviously, have a qualified insurance individual review your insurance needs and get you something that is not connected to where your mortgage has to be held. I'm not an insurance salesperson. Full disclosure. I'm not giving out insurance advice here. But get something that you can move your mortgage. Very similar to a cell phone, right? I always say have a free and clear cell phone if you can, so you can flip providers if a better deal comes up. I'm doing that right now as we speak. Anyway, I don't know. Again, I'm not an insurance advisor. Term policy, a whole life, a dividend, or I don't know, whatever, right? And get proper disability insurance. Get it. Or through the broker channel only. That's me, right? Mortgage professional independent. There is a product that we offer through Manulife, right? Manulife protection plan, whatever it is. Well, if you go to switch to a different lender, you could move the policy. So if you don't necessarily want to commit to a term or whatever, okay, well, we can go with MPP and then you can switch wherever. But you're not held to the bank because this is what's happening right now. I've had this a couple of times, just one very recent. So my comment is, again, I'm not an insurance salesperson. I'm not giving insurance advice. I'm telling you before you take that creditor insurance with your respective bank, ask a lot of questions. There are other options. Okay. Working with an independent mortgage agent. I mean, obviously, I could beat that one to death, but, obviously our insurance, the creditor we offer, you can transfer or talk to an insurance person, get proper advice, right? What makes sense? And I would also say, too, talk to an insurance broker who offers some different options as well. I mean, hey, take it from the guy who went from a bank to an independent mortgage agent, get somebody who's got some options. If you have high blood pressure or diabetes or whatever, I would expect the insurance broker would try to get the approval for your insurance from a company that is okay with that and would be reasonable with the premium. So this is something that you really have to look at. I don't care if you're a first-time home buyer, second time, or you're 60. I don't care. Please make an informed decision. That's what I'm saying. All right. Those are my two main topics. Let's get into some numbers. All right. Let's talk about some numbers. And you're going to see me looking up. So I'm looking at one of my 8 monitors here just to kind of give you some, a sense on some things here. So, okay. What are we following? All right. I hate talking about this. Bank of Canada, who cares? Rates are not going to go down anytime soon. If they drop rates or increase rates, I'd be shocked for the next couple of months. Maybe in March. Doubt it. But I mean, I will say this. Listen, our economy is so volatile right now. I know we got Bucko there, elbows up, doing his thing, running the country, Carney boy there. But make no mistake, like there's a lot of volatility right now. So assuming nothing comes to a head, how does that go? Come to a head or come to head? That this could have gone sideways very fast. If it gets worse or better, rates could move from the Bank of Canada standpoint. Because right now, like on the mortgage side, I mean, listen, we're gonna have ups and downs, 0.15, point 0.2, up, down, left, right, but we're all still about, like, high 3s, low 4s. Like, we're still there with most rates. So, it hasn't been kinda crazy in any way, shape, or form. But, yeah, I mean, fixed rates are pretty stable, but I'm gonna give a couple of stats for you to mull over. Alright, one that we follow constantly, single family building permits. Folks, it's very simple. If they're not building homes, they, the builders, that means we're not increasing inventory at all. Now, it is a scary level. This is single family homes. That's all we're talking about here. We're not talking about condos. We're talking single family homes. Condos are a train wreck. That we all know that. You could almost, I'm not literally, you can almost buy one get one free condos right now. Not literally. And actually, in Toronto, they're so small. You might want to put them two together, and boom, you got one condo. Attack me in the comments if you want. Knock yourself out. But single family building permits are way down, and they continue to decline. It's a forward leading indicator. If we're not building these things, that means we will eventually, might be 2 years, might be 5, might be 6, might be 7. We're going to have less inventory to sell people. Okay. But again, forward leading indicator. My comment, listen, if you got to buy a house, fine, whatever, right? I've had that conversation at nauseum on social media. But listen, if you had a choice, I mean, do your research. You ideally, a single family home is probably something, yeah, I might see a price decline this year. Big picture, long term plan, that's something where we're going to have probably higher values later on, right? Not right away, but later on. All right. Housing starts. So building permits are before it starts. You get a permit, you build a house, it starts later. Housing starts in Canada. So single family and condos are down. Like single families, we obviously know because there's no building permits, no one's building, fine. Condos, good God, they plummeted because who the hell wants to build and sell a condo right now anywhere? But rental housing starts are through the roof. So let me explain what happened with rental starts. So Trudeau government, 2019, 2020, 2021, holy crap, crazy immigration, million people a year, nowhere to put them, housing shortage, no inventory, got to build rental properties, more rentals, more rentals. CMHC comes in with, see their special rental program, 50-year amortizations. I don't know if it was 50, it doesn't matter, but long amortizations. Now we have all, now we're 5 years later because it takes time to build this stuff. And this housing starts are through the roof. But there's nobody here because immigration has dropped and a lot of the housing starts were created for the influx of immigration. Now we don't have very much immigration at all. I think we declined. Okay. Now all the people who are investors who have rental properties, now you got a problem because now there's an abundance of inventory flooding the market. A lot in condos, yes, but a lot of inventory flooding the market. This is also why, to kind of move into the next topic here, rents have declined. Folks, it is supply and demand. We have a ton of rental housing coming to the market, and it's continuing to come to the market. The chart I'm looking at, the graph went, the line went off the graph. And so more supply, less demand, lower prices on rental amounts you can collect. So you better hope when you bought a rental in 2021, 2020, 2021, 2022, like everyone else in Canada, you better make sure that you bought something that was cash flowing and made sense based on the demographic. If you are a new, do your due diligence. Don't just go on a hope and a prayer because a lot of people did that. Okay, that's that. Population growth, we're going to leave it at that. We know it's declining. One little noise in the numbers I want to mention, permanent residency approvals are through the roof in Canada. Like, I'm looking at a stat, 2024, because just stats are delayed, like 250,000 new permanent residents. But those are not permanent residents that are moving to Canada. Those are a lot of them are existing folks who are here on work permit, visas, whatever, and they're getting their permanent residency. So just some noise in the numbers. Just be aware of that. Okay. Okay. Let's talk about mortgage delinquencies. So this is what's happening with mortgage delinquencies. Again, so just a shameless plug. If you're not following me on social media, you need to. SG Mortgage Advice, because I'm putting these stats up constantly. You need to know the numbers behind all the noise and crap out there, because there's a lot of crap out there. So let's talk about mortgage delinquencies, because a lot of people get on and they blow it out of proportion and maybe without the correct context. So let's talk about Canada as a whole, because believe it or not, there's other provinces outside of Ontario. Leave it at that. So right now, and I'm looking at a bar chart, so some of this is going to be estimated. So mortgage delinquencies in Canada right now is about 0.26, not 2.6, not 26%, 0.26 in Canada. 0.25, 26, doesn't matter. The 30-year average for Canada, it's about 0.32, 0.33. Again, I'm just reading off a bar graph. So we're actually right now below the 30-year average. Sounds good, right? Now let's look at Ontario. Ontario alone, mortgage delinquency is about, again, reading off a graph, about 0.27. 30-year average, 0.28. So we're not bad. Simply put, right? That doesn't sound too bad. We're either on the 30-year average in Ontario or we're below. Remember what a delinquency is. You are 90 days late on your mortgage. And then the data itself is usually 3 months behind that. So you're about 6 months behind on most of the data. Okay. Sounds all good, right? And it is. I mean, at the end of the day, we're still paying our mortgages. Fantastic. Even through the slightly higher rates, which I'm going to finish this podcast on that point. The only concerning thing around delinquencies, and should we ring the alarm yet? Not yet. Because again, there's just more stuff I'm going to tell you. Mortgage delinquencies are on the rise in Ontario in particular. Okay, so during the boom, a few years ago, the delinquency rate was like 0.06. It was like nothing. When rates are 0.0% and you got house prices going up every year 30%, all your sins can be forgiven very quickly. Okay. But we're on an upward trend in delinquencies, and that's the concerning part. Does that continue? Because I don't have the stat in front of me, but I don't have to look it up. I know the answer here. Household unsecured debt is definitely through the roof. Most people are going to pay their mortgage before their credit cards and car loans. I know the amount of debt is up. So yes, we do have mortgage delinquency rate increasing and unsecured debt is increasing. That's the concerning part. So overall, hey, listen, we're managing pretty well. It's the trends we need to make sure that we monitor. Okay. Okay, last thing, and then I'm shutting this thing down. So I want to talk about the monthly mortgage payment change for people who are renewing in 2026, because there's a lot of crap out there. So let me just clarify this. And by the way, if you're like, if you guys want to see the graphs of what I'm talking about, let me know. I'm looking at it on my screen here. I just don't bother doing a share screen. Okay. So here's the numbers on the people renewing in 2026. Now, remember a couple of things. The 2026 renewal group is a double cohort. Remember, 1.nothing% from 5 years ago on their fixed rates, and they're about 2 to 3 years ago when they were forced into renewals at, in some cases, the best rate was like mid fives. So that's a big double cohort range. Here's the numbers. So 8%, let me just get this number right here. About 25% of borrowers renewing in 2026 will see their payments rise between about 5% and 20%. That's one quarter of the people. Okay. One quarter. The other 75% are going to see an average of about an 8% payment increase. Now, what's 8%? So let's say a mortgage payment of $2,000. I have my calculator. For the people listening, I'm on my calculator. $2,000 a month times 8%. So that's $160 a month on a $2,000 a month payment. Now, doesn't sound like much. Throwing groceries and everything else is going up in price. It's a hell of a lot, but not the 50% people we're talking about, or double your payment. That's not what we're going to see here. Okay. Now, the folks that will see, just to break this down more, the folks that will see in that 25%, okay, 20% of people are going to see their payments move between 20 and 30%. And about 5% of people will see their payments change about 30% or more. Now, I'm going to guess part of that's probably some alternative and private. I don't know that for 100% certainty, but that's my kind of educated guess based on, again, what's coming up for renewal. Okay. So the change in monthly mortgage payments is not, it's not good, but it's not as bad as we all expected, which I think is the good news story here. So anyway, so that's that. So that's it. We're wrapping this bad boy up. Talked about mortgage renewals, talked about your insurance needs and creditor insurance, and then just some really popular stats that we constantly follow. So any questions, you know where to find me. Like we always end this, love me, like me, want me, desire me on social media, 5-star review. We only take 5 stars. So other than that, we will talk to you in probably a couple of weeks. Stay safe out there, especially within the winter. A little bit of snow, I heard, here in Canada.